presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 3 p.m. Eastern Time on Thursday. We got quite a volatile session going on right now. You have the S&Ps positive by 1 point. We're trading at 63.98. We're bouncing, and you talk about a bounce. We're 35 points off the lows at about 2:15 p.m. Eastern Time. You got the S&Ps right now flat, and that is after digesting. You're talking about moves of Microsoft, Meta to the upside. We'll talk about those coming up in a moment. And then you have Google losing their battle with Epic Games. And so that equity is down 2.3% right out of the gate. You're challenging the lows right now on Google. You have the NASDAQ 100 down by 49 points right now. And yeah, we're coming into important areas. We're right at the lows of yesterday afternoon on Chairman Powell, with the market trading a little bit lower. But check out this bar we have going on in the market right now. Let's zoom in on a little bit, right? You talk about a bar. We haven't had anything like this in some time. You started dramatically higher. The NASDAQ 100 is now 420 points off of its highs. You barely look like you're in the red, but we're approaching 2% off of the highs right now. Okay, and you give it up on a day like this. Look at this S&Ps. And it's going to be an interesting hour of action. As we come in, you have Apple and Amazon after the bell. Amazon behaving pretty well today. You're up by 2%. Strong numbers on the Azure, strong numbers on the cloud. Amazon was as high as 239. You're trading at 234. They'll be out with their numbers after the bell. Apple, not really in the same genre in terms of all the cloud exposure. Apple shares flat right now, but we have red across the board. And you're talking about a market that is now about 75 points off of the highs. So the S&Ps are flat, but we were positive by more than 1%. So you have a give up going on right now. And look for this technical area. I'm talking about the lows of yesterday. You got a nice bounce there, but we got 51 minutes left of trading today, folks. And boy, could it get any better really on the numbers on Microsoft and Meta? I guess it could have gotten better. The only way it gets better is if they make as much money as they did and somehow they say they're not going to have to spend the money. But that's not how the case is going to go. And Microsoft in particular, quite a pullback, but Meta, man, it's on its own planet. Up by 12%, up by $80. You talk about it. All right, so we get inflation data this morning. 8:30, zooming in on the action on a 5-minute basis, coming into the market. There's a little 8:30 volatility. We jump over to yields right now. And we got a little bit of lower price, higher yield right now. You're looking at a 10-year. 4.36. All things considered, you're just back to where you were at almost 9 a.m. this morning, right? The dollar with a decisive move, though. And with the dollar sitting at 100, gold holding up okay, but sitting at 33.48 right now. And as I mentioned, right, that's within the futures. If you're looking at the futures, okay, you get this theoretical bump when you roll over on a quarterly basis on futures, right? You roll over, you give yourself another 90 days. The time value of those futures contracts boosts that from 33.15 to 33.67. So you're talking about a $50 boost. So if you didn't have that $50 boost going on, okay, and it occurs every 3 months, but on a spot basis, you're pushing the lows right now, as you should be when you have dollar strength at almost 100 right now. And yeah, inflation reading offers few surprises, but that reading came in at 2.8%. When you're talking about core PCE, core personal expenditure, on a monthly basis, 0.3% in June. On a yearly basis, you do come up at 2.8%. And if you're not aware of it, folks, tomorrow is August 1st. Well, that's the deadline, right? And so you get the headline out there that President Trump's going to set new tariffs before midnight. You got a slew of headlines coming out. We'll see if we get some volatility tomorrow as those become inked on paper. Plans remain fluid about how the U.S. will handle the many nations that did not reach a tariff agreement. You got a little volatility and a little fear coming into that potential. And yeah, all things considered, VIX, you know, we're elevated, okay, with an S&P that's just negative by 2. Okay, we're not dealing with a 14 handle anymore. We're not dealing with a 15 handle anymore. We're dealing with a 16 handle, and the S&P is just negative by 2 points, folks. And we'll be talking to our man Tim Ward. And you know, when he looks at the SPY VIX, the ratio, and you have a VIX that's spiking well off the high of 17 right now, but this market has not fallen apart just yet. Right? We're just back to where we were basically at 11 in the morning yesterday. We've had extreme volatility over that period of time. And yeah, you take a look at NVIDIA, man. I mean, NVIDIA just traded from 185 to 176. This company is worth so much money. That's almost a $9 move, which is a $225 billion market cap move. And all that was just a little bit of a fade lower off the exuberant high of 185 till this morning. $225 billion market cap. They're the leader. And if you can wipe $225 billion in market cap off the equity in a heartbeat, basically offer just a little bit of exuberance, over exuberance. And the volume hasn't peaked yet. I was going to say, maybe we'll get some volume. Wait, hold on. Let me back that up. That might not be the bar. Yeah, we have some volume, and we'll get some volume. Last trading day of the month, you'll get some volume as well. And we've already done about 170 million shares for NVIDIA. All right, we're going to make a run for these lows again, folks. You know, you got volume at the lows of almost 12,000 contracts. That's on a 5-minute. Let's go a little. We'll get too focused. On a 15-minute basis. Yeah, volume at those lows as well. Look at this. You bounce on nothing. You get a little bounce here, but that's it. Amazon up by 1.7% right now, and Apple shares are flat. So yeah, we might get this right at 4 o'clock. You might get it at 5:30. You might get it close to midnight. The plan is fluid. 150 countries are going to receive a letter imposing blanket duties of around 10 to 15%. And yeah, August 1st is tomorrow. All right, we'll come back and we'll talk some of these high flyers, man. We'll talk a little Microsoft, and we'll talk a little bit of Google as they lose their appeal in the App Store fight with Fortnite maker Epic. And that's in the 9th U.S. Circuit Court of Appeals. Means the Google Play Store will need to lift restrictions to prevent app developers from setting up rival marketplaces and billing systems. Google lower today. We'll come right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Taking a look at some of the numbers in terms of Microsoft and Meta, and, for all the haters of Zuckerberg, man, they're firing on all cylinders, to put it lightly. And yeah, pretty remarkable, the underpricing. Risk reward, okay? If it was that easy, everyone would have done it. I'll tell you, even myself, right? Okay? I was able to, and this is not a brag in any way, but hey, hindsight, there's plenty of losers. But, on some of this, in terms of retirement, it's went up a little bit maybe of a Meta down on around February when you got that initial pullback. But there's always a lesson, right? You think you go down, you think this market tanks, you say, oh my goodness, Facebook drops from 350, you're down to 218, and it just kept going, man. But they have turned around the ship, and they got an ad operation that is unparalleled, like the world has never seen before, folks. And you are now up $80 on the dot right now. And yeah, you get into some of the numbers of Microsoft shares, okay? 4 trillion market cap. And Microsoft breaks out Azure for the first time. Azure Cloud Computing, 39% rise in sales. Imagine being a salesperson and selling Azure right now. And the market was only looking for 34. When you talk about the whole cloud department, you're talking about it's a slightly lower number. Those are market caps. But yeah, Azure is expected to post a 37% growth rate in the first quarter above forecasts. And that number they pulled out for the first time of $75 billion. I'm not sure they included, they didn't in this. For the first time, they posted that Azure. They're proud enough to break out those Azure numbers, man. And why not? And folks, you don't have to grow at 35 to 39% many years in a row to get some pretty large numbers. I'll give you a quick mental exercise, all right? I was doing this today. We're talking real estate, all right? And if you take a $300,000, if you're watching Tiger TV right now or you're in the den, right? Take a moment and do this one on your head for a quick second, okay? And give me one moment. I'm going to get it exactly. Because it's wild stuff, man. If you take, here we go. Let me pull this up. Make sure I'm looking. If you take $300,000, okay, and let's say you buy a house for $300,000 in the year 2010, okay? Stay with me. This is a great exercise, okay, if you're in real estate. I spend a lot of my days on real estate now, in the market, and of course with rates in focus, with housing prices in focus, etc., okay? You buy a house for $300,000 in 2010. Somewhat near the lows, okay? And you say to yourself, what should that house be realistically worth if I'm getting a reasonable gain each year compounded. Well, you got 15 years to begin with, okay? That's the nature of this. We have gotten to the point, and yeah, you had a market where the housing market, maybe it bubbled, right? 2010, 11, 12, 13, 14, really you started to begin the upward trajectory, okay? So you might have a little bit less time in there. But if you grow that, let's say your house worth 300 grand in 2010, you're growing it for 15 years, okay? Let's say that I just say to you, you know what? You're going to get a 7% return on your house. Your house is going to grow 7% in value every year. Folks, there were some rip-roaring years in the beginning of that bottom, and I'm not saying 300 grand is the bottom, okay? But that's just saying you got 7%. Man, there were some pandemic times. If we're talking about Florida, okay, we're talking many areas in the country, there were some pandemic years where housing prices went up 50%, 75%, and then maybe we've stagnated for 3 years, right? Which is just why, let's just say you got 300,000, okay, and you grow it at 7% for 15 years. What do you think that compounds to? $300,000 house. What do you think it should be worth this year if you compound it for 15 years at a very reasonable 7%? Remember, we had inflation some of those years well below that, well above that. You would have been losing money. $827,732. $827,000. That's buying a $300,000 house in the year 2010 and looking for 7% value over that period of time. You're at 820. Now, you could make the case that maybe that's a little aggressive over that whole, whatever it is, it's a reasonable number. Okay, and you got some big numbers there when you're talking about housing, you're talking about yields, and I know I digress jumping around, but housing prices are not going back. Okay, and yes, there's going to be extreme volatility. Okay, and this goes both ways. That does not address the systematic problem that young people cannot afford a house right now. Period. Not enough people are talking about that, period. Don't agree with a lot with what Tucker Carlson says. He's been harping on that, and I do agree with that one. And I'm agreeing with a lot more that he's talking about as well recently. But yeah, why is everybody not? That should be the only thing both parties are talking about. Nobody can afford a house, man. You got to make easy six figures to afford a house right now, and that's pushing it. And the house that you're affording, if you're putting down 20%, you're probably putting down close to six figures as well. So you got to make six figures, you got to save six figures to barely be able, that part doesn't work. But the tough part about it is that we have 7% yields. There's going to be pressure. And I have the housing builders up. We'll take a look at these, okay? There's going to be pressure on yields to the downside, and that is going to help. But on the other side of that, the way this equation squares is not housing prices pulling back dramatically. Because if you had a home for 300 grand, okay, and I'm talking about getting a home somewhere near, a lower value, right, on the pullback. When you got a pullback, those years would have been big years in the beginning. I'm talking about getting a good value for 300 grand in 2010. Early on, when the real estate market started to bounce, you were getting some really nice appreciations on a yearly basis. That's a very reasonable number, folks, to say look for a 7% return on real estate from 2010. Okay? Change the years a little bit if you want, but those houses are not ripping lower because everything is much higher. Because 15 years have passed. And even if you take where we began, you can go back 10 years where the market was really starting to accelerate in 2014, 2015. I got to go back and remember. I think my dad started the real estate fund. What was it? People in the den probably going to know better than me. 2012, 13, 14, something like that. Okay, that's where the low was. That's where the opportunity was 15 years ago. And it doesn't take a lot compounded over 15 years. And yeah, nowadays, you add on, it's a tremendous amount that you need to spend over that. Now, here's the other side of that, okay? Because, Fletch, you bring it up, right? Put on property tax insurance and upkeep for 15 years, right? And you got not that much, okay? Here's the other side of that conversation when it goes to real estate, though, folks. That number of 300,000, okay? One of the properties that I was involved in Tampa, okay, and this was right around 2013, so it's not exactly 2010, okay, but my duplex that I have in Tampa, is a property that was almost pushing 200 grand in 2011, 2012, okay? It was a bank-owned property, foreclosed, like many others. It needed about $90,000 in renovations, okay? And this is where you didn't have to put up 20%. Bottom line is you put up like 5%. I can't even remember, okay? I got the renovation loan that you can get. Got like 90 grand on a renovation loan, so I put up 10 grand. They give me 90 grand. I end up all in for like 300 grand. That's where the analysis comes from, okay? And meanwhile, I get a tax write-off for the depreciation of the renovation that I did, resulting in a cash flow almost positive nature. And anyway, yeah, housing prices, man, they got a nice... We're coming back with Tim Ward, folks. We'll talk some equities, some S&Ps. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have the S&Ps off by 14 points right now. NASDAQ off by 92. The Dow off by 240. And I was a little bit rushed just wrapping that up. The point being, folks, you get a real pullback over the next 6-9 months of any degree, And I think that the housing prices, take a look at these home builders right now, okay? Because I'm seeing similar stuff within the big, beautiful bill. You have accelerated depreciation. You have a real incentive. We're seeing investors calling, looking to deploy capital, to get capital to work, to purchase, whether it's the renovation, as there's some advantages in there. And that has given a little bit of a demand, but investors, and we'll see if retail can come back into things. But I like how some of these builders, the home builders, are basing out. You take a look at those. Lennar, right now flat at 112, and DR Horton got a little bit of a lift last week, trading right now flat as well. All right, folks, right now we're going to jump over to our man Tim Ord. We talk to Tim every Tuesday and Thursday at 3:30. Put it on your calendar. You can reach Tim every trading day at his website, ord-oracle.com. Check that one out. And then don't forget, right under the services tab, folks, a couple of outstanding webinars. They're 90-minute webinars with our man Tim Ord, right at TFNN.com. You hit that services tab, and you have the 6 secret ratios every trader should know. We talk about some of those ratios. We will today. And then the secret science of market tops with Tim Ord. And I don't know if we're at the top, but we got a little action today. Tim Ord, good afternoon.
Yeah, it's a little bit confusing here. I was kind of bearish. I thought, well, anyhow, let's look at the numbers and see what we can determine.
Everyone's a little, is it going up? Is it going down, Tim? I know we have record earnings and then we're negative across the board right now. But no, let's get into it, please.
Yeah, okay. As you know, I do a lot of stuff with the ticks and trend. And basically back at this last low, I kind of shaded it, blue right here. We had trend closes at above 1.2 and tick closes below minus 200. And usually when that happens, especially when you get a group of them, which you did back in mid-June, that's usually enough panic to get a rally going. Well, we got the same thing going on right here. Over just this week, we had a trend close there 1.22 with the 322 down tick reading. Tuesday we had a 1.43 trend, 264 down tick readings. Yesterday at 1.17, 403. Now those tick and trend closes. This is on the close. Show panic, and panic only forms at bottoms. So we got actually a support area right in this region, which kind of contradicts some other stuff. So I'm not sure which one's drawing the long or the right conclusion. So let's look a little bit further here. I showed this chart on Tuesday, and then what I wanted to point out, back last Thursday, we had a trend close, the 10-day trend closed at 0.88. Anything below 0.9 is bearish. And all these pink areas I lined here up were times when the 10-day trend got below 0.9. So they become close. So we started having that going into the top. I'm thinking, okay, this is going to be an easy top to pick out. Well, right below that is a 3-day trend. And the 3-day trend coming in right now, as of yesterday's close, 1.27. And so I noted the times when the trend got to around 1.2 or higher, and that's all these blue areas right here. And the reason why I noted those are the times when actually, in this case, the market kind of went sideways. The market went sideways there. Market was actually at top there. So my point is, with the 3-day trend above 1.2, you can have still tops, but the odds are against it. So, okay, let's move on again and look another indicator here. This is the weekly SPX tilt ratio. And we talked about this on Tuesday. You know, the market was going up, and actually we hit newer higher. This is a weekly chart. Yeah, we hit a higher high this week, and even the SPX tilt ratio made a lower high. So this over the last 3 weeks basically is kind of trending down where the market's been trending up. And in past, here's the last time that kind of happened, was going into the February-March high. The ratio was going down, the SPs were going up. So we got something similar here. So there's a lot of contradictions going on. So what do? You toss a coin and go with whatever you flip on? Well, no, you wait. Yeah, because something's about to happen. And the market always tells you right before it happens what it's going to do. And right now,
I like it.
The best thing it can tell you is they're going sideways, because it doesn't really because you got panic in this region, so you may push a little bit higher. And these indicators like this one, the X tilt ratio, it can remain in bearish territory for a number of weeks. So it can be bearish next week too, and the market kind of just maybe creep higher, not much higher, and all of a sudden we'll get a signal. So that's how I'm viewing the market. I think ultimately we'll go down probably to the February highs, which is around 6,100 on the SPX. I just don't know when that's going to start, but I still think that is going to start here fairly soon. I still think upside is minimal here, because once this ratio starts going down, your upside is usually not much. Can creep up a little bit, but upside's limited. And also we're entering into the bearish, the most bearish period of the year as far as a quarter goes. And so the best we can hope for in this time frame between now and October is probably a trading range, and I think that's what's going to develop. And we need a trading range to develop here. If you notice, we went from April to currently was straight up. We haven't had a pause yet. We haven't had Tom used to talk about ABC patterns all the time. Well, we haven't hit a B pattern yet. It may be developing here, but we haven't had one yet. And so the market at some point is going to take a timeout. All markets do, and we'll gauge it from there. But at best, I wouldn't short it here because there's too much panic in the ticks and trend. I wouldn't go long here because you got a divergence in the SPX tilt ratio. So that says a lot of nothing. But it's just I don't see a decent trade. Here's why I think it's going to happen. This is
I love it to jump in. That TLT too. There's a big, and I love how it shows up on the ratio. And I was just looking at the TLT. That's quite a rise, even over the last 5 or 6 days. And just to add, we have some big tech earnings, and I know you're just looking at the charts. But even myself, I find myself saying today, and these are quite the companies, man. But if the market can't hold up when you have Facebook, Meta up 12%, right? You had Microsoft shares up to 555. We have Amazon ahead of their earnings up 1.6%. You have Nvidia was as high as 183, and every index is red right now, Tim. And I'm like, I just thought, as you're saying, where's the upside, right? I'm like, geez, where's the upside right now if this market can't even hold green prices? I mean, those moves last night were just staggering right into the morning. So that's just kind of siding, with it makes sense. It does. We're coming into a break, Tim. Hang tight. All right. I see we're going to talk some more charts. We'll come back with our man Tim Ward, folks. And yeah, we got markets in the red, and we get to do earnings again after the bell with Amazon. With their numbers after the bell, they're up by 1.6%, and Apple in the red. We're coming right back, folks.
Market Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got markets slightly in the red. We have S&Ps off by 11 right now. NASDAQ 100 off by 78. We're talking to our man, Tim Moore. And don't forget, folks, right under that services tab, you can check out Tim's outstanding webinars, each of those 90 minutes long. And also at his website, ord-oracle.com. There it is. Check it out. All right, Tim, let's keep going. Where are we off to next?
This is the S&Ps, just to kind of finish up. This is a weekly SPX. Here's what I'm thinking is going to happen over the next, couple of weeks. Or actually, I think we're going to enter into a trading range at least until September, maybe October. But we're probably making close to some sort of a high around here, but I don't have a trigger for a short. So I'm neutral. Let's flip to the gold issues. Okay. Keep showing this chart as telling the right story. This is the RSI of the monthly XAU. That's all it is. It's a good indicator. Chart goes back to 1988. And these are all the times the RSI reached above 70. We're at 72 area right now. So looking at a high, there's another chart here. Here's a short term. I had another chart, and for some reason I forgot to put it on. But anyhow, this is geared to short term to see exactly where we are. And the second window up from the bottom is the GDX up down volume with an 18-day average. So that measures the up volume against the down volume. You take an 18-day average of it. Next higher window is the GDX advanced decline with an 18-day average. So this is a trend following indicator. As long as it stays above minus 10, you're in uptrend. When you're below minus 10, you're in downtrend. It doesn't really try to take the exact high, but sometimes it does pretty well. But a lot of times you get divergences. Going into the April high, you can see the up-down volume and advanced decline indicators made lower highs. That's when we got out up around the 50 range. The market fell back a little bit, came right back to the 50 range, and it's been going up in the 50 range since June. So almost 2 months now, really virtually going nowhere. Made a little higher high, and that ratio made lower highs. And finally, today we broke below minus 10 on both of them. And so even though the market really hasn't pulled back here, if these two indicators stay below minus 10, the market's going to pull back. And I've been saying over the last couple of months, since April, at some point we're going to pull back down to 40. I think that pullback has actually started now. So I don't think we're going to rally back to the old highs. I think that probably the top is in at the last high, looks like late, third week of July, wherever that high is right there. And since this indicator really, GDX really hadn't pulled back much, pulled back maybe a couple of points, and these two indicators fell right through the floor. And so that shows you the advanced decline and up-down volume really got weak. In other words, down volume increased and the down issues increased compared to the up issues. So that's usually a lot of times trending. We had one back in here, the market turned around, still went back up, but it still didn't really get past the 50 level. So I'm thinking we're pulling back probably with the S&Ps, but this one may pull back first as far as the GDX compared to the SPY. I think both markets will pull back together, and nothing significant. I think the 39, 40 area is going to be major support. That's where the next big rally comes from. But I don't think that rally will start probably in maybe late September, early October timeframe. And they'll go on to new highs, because I have some other charts say the bigger trend's still up. So this is a timeout and an uptrend is what I'll call it, not a top of any significance. So
that's great stuff, man. I agree a lot with what you're saying, and it's always cool when a number of indicators, and it's so cool. The GDX, XAU, HUI, all of them just completed. You'd say my dad talking about the A to B, C to D, right? ABCs. You go from that beginning of February last year, and then you take a B point of like October of last year, that high, and then they all pull back to where this run began. They all completed perfect, 1-to-1, A to B, C to Ds, and they're all just kind of chopping around right near those highs like you're talking about. So no matter what, that's quite a move when you complete a 1-to-1, and they all broke above it on that April acceleration, and it's almost like exact on every chart to like almost the tick that's where we are. So as you say, from that same logic, it's like, yeah, we had quite a run, folks. This has been quite a run as this market digests it, for sure.
Yeah, that's all it is. That's a good point. It's digesting. And so the reason why, let's look at this. This is just a gold and silver stock, USAS, American Gold and Silver. Here's a lot of stocks, what's going on right now. As before, I said, to get a buy signal, this is a monthly American Gold and Silver going back to, 2021. You get a buy signal when you have a sign of strength through the mid-Bollinger Band. So anyhow, that day or that month is a buy signal. So you got a buy signal around close to 50 cents. And now when you get up above 80% above the upper Bollinger Band, in other words, things are too far stretched away from the norm, and the norm on a Bollinger Band is the mid-Bollinger Band. And here, right now, we got the high end, or you got 100% above the upper Bollinger Band right now. Last month, you're about 50% above the Bollinger Band. Now you're having to open and close above the Bollinger Band. So this stock is, there's a lot of stocks that have done this, and this is just one of them, but they're all kind of doing the same thing. They're way above the upper mid-Bollinger Band on the monthlies, and that's when you get a sell signal. So I say 80%, this one's 100%. And so where are you going to go? Well, you're going to go back, most likely, support. Support on this one looks like about 65 area, somewhere in there, and that's where you should buy. So you should buy that next pullback. And these stocks will keep going up until the mid-Bollinger Band turns down. And I don't see that anywhere near happening unless you have a crash in the gold market. And I don't think that's going to happen. Once you get the mid-Bollinger turning up on the monthly time frame, it's up for months, if not years. So we're still in the early stages of a bull market. And the bull market will end when you close below this mid-Bollinger Band. And that don't happen because you got support right now. You had a sign of strength through the previous highs, which these highs back here. So now those previous highs should become support. So this is a big buy. This is just leg one up of you get a consolidation down to 65 and another big leg up. Here's a weekly chart of this stock. I own it. I'm not actually going to sell it just because I actually bought it below support a little bit, so I might just hold it until support. But here's a little bit easier to say. You can see the sign of strength through the previous high. The previous high is right there. That's looks like about 70 cents. So that's why I have the SOS. It stands for sign of strength. So you had a sign of strength through the previous high. That previous high now should be support. So you probably have something here, then you'll break above these highs back here at some point. Nice. How long this is going to take? It might take a couple of months. I don't know. But we'll gauge it as we go forward. Actually, that's my last chart. So
hey, let me ask you, do you look at thank you for such a great information, man. And those and pointing out, folks, if you're trading those stocks, obviously high risk penny stocks, man, and you're saying, the pullback percentage wise, right, on those equities, pull back to 65. Hey, do you look at sectors at all, Tim? We had one question about the semiconductors. You ever look at sectors, or does that work?
I can have them email me or email to you and email it to me, and we'll take a look at it.
Perfect. We'll get it. I'll have them email me, and we'll take a look at it on Tuesday, folks. Tim, thank you so much, man. Have a great week. Have a great weekend. We'll talk to you next Tuesday. We'll talk some semiconductors as well as the indexes. Appreciate it, man.
All right. Will do. Thanks a lot.
Take care. Folks, we'll come right back. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And boy, you talk about a turnaround. We got markets breaking lows right now. You're doing it on volume. You got the S&Ps down by 0.5%. And yes, we are down by 0.5%, folks. But you're down by 0.5%. But we're off of the highs by 1.5%. Okay, the S&Ps are 108 points off of the highs of, and that's not some fanciful, midnight number. That's right where we were on the open. Maybe slightly lower, but yeah, and the overnight is not always indicative of where we're going to open, but you talk about a sell-off going on right now. And as I mentioned, you can't do better than what Microsoft and Meta delivered. Talk about a high bar for Amazon and Apple tonight after the close, but you got markets pushing session lows below where we were yesterday. The Dow off by 420 points. Russell's off by 1.3% right now. The Russell was not in the positive this morning, barely. They were the only index currently in the red. And yeah, you jump over the VIX, and yeah, we're at 1709. Folks, check out those Tim Ward webinars. Great segment with Tim. We do that Tuesdays and Thursdays. And if you have any questions for Tim, okay, we had a great question from Duncan Steve in the Den. He's going to email me a question. Tim will talk some semiconductors. Send me an email, folks. Tommy, at TFNN.com. Send me that email. You want me? Please send them. You want me to take a look at it? Just say stock request or show request, and send me if you'd like Tim Ward as well. He's going to take a look at some semiconductors. But yeah, you talk about that SPY VIX. Check out those webinars, folks, because these ratios, okay, the VIX, the TLT, what Tim is talking about all the time, the TLT, okay, as we're wrapping up the program, yeah, the TLT just traded from 85 to 87. That's quite a pop on the TLT on a short-term basis. And then the VIX, of course, just spiked from 1497 to 1692. And on a volume basis, folks, look at that daily. Look at that volume, baby. Okay, that's the most volume we've done all month. We close out the month with negative action. And on a weekly basis, we've already done more volume than the last 4, 5, 6 weeks, and we got an extra day tomorrow. Folks, thanks so much. I'm coming back for the top of the hour update, and I'll see you tomorrow morning, 9 o'clock, for the morning market kickoff. See you.